are midway through the trading week and it's time to get the insider track on some of the major currency pairs. On the phone with me now is Jacopo Amalfitani of Everest Markets. Jacopo, the continued US government impasse has been described as leaving traders chasing scraps, as G10 currencies currently trade narrow ranges and with weak volume. In a week of limited movement, how would you advise viewers to position themselves?
Well, we believe that probably shorting the dollar is the safest bet. We've still got today and tomorrow to see what the U.S. government decides. And as far as the policies that have been brought forward so far, i.e. that of deferring payments or simply not paying certain expenses, they don't really seem to have a very good outlook. The message from these are basically that the U.S. is still in a very fragile situation, so probably shorting the dollar is the best stance. Now, the risk of this position, though, is that if the debt ceiling decision is simply postponed to the beginning of next year, we're actually going to see the same thing that happened when the QA tapering news came out last month, i.e. traders will probably perceive the debt ceiling postponing as a good sign, and this will probably just make money markets and stock markets soar, whereas, the underlying problem will still be there in 6 months' time.
Despite a consolidation around the 135 level on Tuesday, the euro has dipped lower against the dollar on this Wednesday, following comments from Fitch that the ratings agency could cut its AAA rating on the US. How does this impact your short, mid and long-term forecasts for the euro-US dollar? And similarly, in your view, what could this do to the euro's purchasing power?
Well, the truth is that even if there has been a slight overnight dip, since yesterday in the late morning, there has been an appreciation of the euro of about 60 dips on the dollar. Now, the downgrade from the AAA status of the U.S. would simply support what I've previously stated about the U.S. economy not being very strong. So the probable outcome will simply be a euro appreciation. Now, this definitely falls in line with the last week's ECB report, which stated that there are some positive signs of improvement in the EU area. There is also a consideration that has to be made, and that is that there are some peripheral regions in the EU which are still struggling, and this kind of brings some underlying potential to the EU rise in the medium and long run as soon as this recovery will be taking place.
With all eyes on US fundamentals, the euro-Japanese yen is a pair which seems to have lost momentum as it struggles to find a fixed support, bouncing on Wednesday following Tuesday's sell-off. Where do you see this pair settling?
Well, the current trends do seem to show an appreciation of the euro in respect to the yen. However, as you have said, the US fundamentals are going to play a very key role in the determination of the exchange rates. Now, there are two possible outcomes. Firstly, if the US defaults, and there's going to be a flight to safety, which is definitely going to bring the pair down and increase the value of the yen. If, on the other hand, this default does not occur, we'll probably just see this growing trend of appreciation in the euro continue. Now, the only other consideration that does have to be made is that if there is a downgrade of the US debt, this is going to put significant pressure on the yen. And this is just going to intensify the trend that we've seen of appreciation of the euro.
And lastly, euro-pound movement this week appears to be pegged to crucial UK labour data released on this Wednesday. Given this bias, how do you see these results playing out for this pair? And similarly, what other releases will euro-sterling traders be looking out for in coming trade?
Now, the UK unemployment number that came out this morning fell within the forecast, i.e. 7.7%. And this number has not really changed over the past year. It's been shifting between 7.9 and 7.7%. And policymakers have stated that until this number drops to 7%, it is not actually, they will not actually change interest rates. Therefore, the implications of this number are pretty limited. Now, another important number that did come out today was the CPI in the euro area, which has simply fallen from 1.3% to 1.1%. However, it didn't actually have any impact on the euro-pound pair. Now, an important number that's probably going to come out tomorrow is the UK retail sales. However, the predictions are that this number will stay the same, or in the worst case scenario, actually worsen, given the global state of uncertainty. Therefore, given the current situation, the pair is probably just going to keep on rising, as the euro will very slowly but steadily appreciate as it resolves some of its internal issues. And this seems to fall in line with the predictions made by the ECB in last week's European report.
Jacopo, many thanks. That's all for now, but I'll be back shortly with a look at the US housing market, so don't go away. Goodbye for now.